The game of controlling the rails. We got a little bit of a history lesson here today, but it has to be said and it has to be covered because there's rumors. JP Morgan is short strategy. There's a lot of things that's happening in the marketplace, so we're going to actually cover it all for you in this video. So strap in because it's going to be a bumpy ride ahead for the crypto crew. That is for sure. Right now, what we have started on October 10th, the crypto market just didn't pull back. It completely collapsed. 33% drawdown. $1.4 trillion was wiped out. 42 days of non-stop pressure. Everyone blames sentiment, macro manipulation, same old tired explanations, but we really missed the one trigger, and that's on me. And I'm going to say a quiet technical institutional bombshell was actually dropped by one of the most insanely large companies out there. I'm going to take you over to them. They're right there. They're called Morgan Stanley. 18.3 trillion assets under management. Okay, huge firm. It's actually, I could tell you stories of this firm, man. Right now, it's basically, this is basically, I'm gonna go into it for you, but they have bit me twice in the past, and I'll talk about that. I'll just talk about one of them. But anyway, as it stands right now, today I'm going to show you exactly what happened, why it matters, and what potentially could come next. So the it's an MSCI DAT bomb for those of you, okay? It Morgan Stanley. Uh, all right. Anyway, what's up, crypto crew? Here we go. This is your boy Tom here, bringing you the hottest in crypto and Bitcoin action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already, and make sure you come on over to X and follow us on X where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. Let's take you back over to the good old Morgan Stanley site. This is really where it all began, and I'm going to have the background for you, and we can try to put this together and basically get ready to ride these markets together, surf the markets. All right, so MSCI, Morgan Stanley Capital International. It's a giant behind the MSCI World, MSCI USA, MSCI EM. It quietly floated a proposal to reclassify digital asset treasury companies, or DATs, as funds, not companies. This includes good old MicroStrategy, right? It also includes Coinbase, Galaxy, Hut 8, CleanSpark, any company holding crypto as a treasury asset. If DATs are reclassified as funds, they become ineligible for equity indices. They get removed from MSCI benchmarks. Every fund tracking those indices must sell them immediately. This isn't analysis. This isn't sentiment. This is rules-based selling. And rules-based selling moves hundreds of billions of dollars. Now, if you look at it, we can look at the sentiment of the total crypto market. Okay, it spooked institutions on that day. That's why we never really got any type of bounce. Okay, there was something way behind the scenes that is basically was whispered, but the big funds saw it and they ran for the exits. They were enjoying the party. They danced by the door as it stands right now. So, why index inclusion is everything for digital assets, okay, or treasuries, right? DATs, right? Well, when a company joins a major index like Morgan Stanley Capital, okay, or the FTSE, three things happen. You get mandated buying, okay? Now I'm going to take you over to good old strategy chart right here. And this is exactly what happened with Saylor's company strategy. When they got added to the Russell 1000, they got a 300% pump, okay? Now, because index funds, pension funds, sovereign wealth funds must buy the stock. Liquidity explodes. More buyers, more volume, more stability, right? Price goes up, not because of fundamentals, but because forced flows increase demand in it. Now, if we look at MicroStrategy, as I said, MicroStrategy proved this after joining the Russell 1000 in when was it? Actually, when did it happen? Well, it doesn't really even matter when they ran. In early 2024, right? Uh, Strategy ran nearly 300%. But because you're in the index, you create what's known as the DAT flywheel. This is exactly what Saylor did. That's why a lot of people said, "Oh, it's a Ponzi scheme," right? And they have every right to think that, right? That I'm not saying that. I saw some comments like, "Hey, Tom, they're going to be delisted." You know what? It wasn't written in stone. It's not written in stone. But if we got rumors that J.P. Morgan is shorting this, okay, without smoke, there's no fire, right? So something's going on behind the scenes. So once you create the DAT flywheel, what you got is you issue debt to buy more Bitcoin. Now your stock moves higher, index allocates more forced buying, issue more debt, buy more Bitcoin. So what's going on with Morgan Stanley Capital's proposal threatens the entire model. Now, for his defense, and again, I didn't see this. This is on me. Okay, he came out immediately and he said something like this. Let me show you exactly what he posted. So this is what gave credibility to the whole MSCI index matter. He came out and said strategy is not a fund, it's not a trust, it's not a holding company. We're publicly traded, operating about 500 million software, blah, blah, blah. Okay, that was his defense. That doesn't mean that he's going to win the battle. And most likely, like I said, we put on our X post right here. I'll show you where we have a post coming up that we actually say that there's a rumor out there. And where is it? Right here. Let me get to it. Where is it? Where is it? Where is it? Where is it? JP Morgan is actually shorting. Here it is. Unconfirmed whispers. JP Morgan's holding a huge short against Saylor. So if this is true, this would make sense. It would make sense because that means they know the outcome already. They know it's going to go through. Now, there's a date that we have to watch out for, but really, this is why the market's under pressure. And if MSCI wins, MSCI USA funds must sell. MSCI World Trackers must sell. ESG portfolios are going to purge. Factor quants unwind positions. Multi-asset mandates cut exposure. It's going to be a bloodbath. It's not going to be good. Okay, so you're going to have to trade this stuff for sure. Okay, you're going to have to learn how to do some DeFi. So that's why I say join our pro group. We'll help you through this. It's going to be messy. That is for sure. Now, if MSCI does this, the FTSE will follow. The S&P Global will follow. Okay, we're talking major bloodbath here. Okay, and now the one thing that's good about it, and I'll get into it. What happens generally is that it creates a global coordinated mandatory deallocation from Bitcoin proxy equities, right? So institutions reacted already the way pros always react. They de-risked before the forced selling and not after. That's why they got out. October 10th, they said, that's why there was no bounce. There was nothing. It was like a quick run up to 112 and then see ya. Right up that, I think we got up to maximum we got up to is like 116, where I said there was a regression channel up there, and the marketplace sold off. But right now, if we're looking at what's happening, the Dow Jones is going to follow, the stock 600 will follow, and it's, as I said, it's going to be really a bloodbath. Now, they published this proposal, of course, on October 10th, the same day Bitcoin began a 33% decline. All right. We also saw all this money move out of the total crypto market. The total crypto market cap lost 1.4 trillion. Debt equities collapsed. Liquidations exploded. Crypto X guessed for every wrong reason, including me. I didn't put this together. I really didn't. I heard rumors about it. I was brought to my attention. I was like, what? So that's on me. All right. But it doesn't matter because we are where we are. We wouldn't have been able, basically it called getting out of the longs around, like, say, let's say I was saying, look, it doesn't looks like we're going into the CME market caps when we were around like 105, 104. Okay. So I'm not saying, oh, I'm not patting myself on the back for any of that. But had I would have known and put this together a little bit sooner for the crew, I would have been able to give a better warning. But we are where we are right now. So, the institution saw the proposal and knew the consequences instantly. Really, crypto did not fall because of charts. It fell because of flows, and flows always win. So we got to pay attention to that. Now, why does MCI want DATs out? Let's clear some things up, okay? MCI isn't attacking crypto. This is about what they call index integrity. And there's a couple of three reasons why they want them out, okay? Number one, first of all, they want to control the rails. Okay, they want to control the rails. They don't want any of this. They do not want companies that do not have meaningful operating revenue. So, in other words, their value cannot just equal Bitcoin's value. All right, structure equals leveraged Bitcoin ETF. That's what they're saying. They're saying they do not belong in an index. Now, there's another reason why. They say that DATs distort index volatility. So a 15% move in Bitcoin could equal a 20 to 40% move in strategy. This contaminates the equity index risk profiles. Index providers hate contamination. They can't give good projections with it. So that's another reason. They want Regulators want clean classification lines. So pension funds shouldn't, accidentally hold crypto beta. They shouldn't do it. They should want to do it. Now, the real main reason is that Morgan Stanley Capital International must protect its brand. Think about this. Let's say, for instance, Bitcoin crashes 40% and it drags Morgan Stanley Capital International world down. Think about the suits in Congress. The regulators. Why did you allow this? You should never have allowed it, right? What's going to be their defense? They don't have one, but they're starting their defense right now. So what they're attempting to do is they're attempting to close the structural loophole down. That strategy set up. The DAT flywheel, issue debt by Bitcoin, index inflows, repeat, rinse and repeat, right? Index providers want to shut it before it becomes common. Not good for us. Okay, not because we will be collateral damage to this. That's why I'm saying you're going to have to trade this stuff. Okay, you're going to have to get into our pro group and trade it. Look, we can make a tremendous amount of money picking the levels to short term to buy and sell at. Oh, no problem. We could definitely do it. It's going to become more like a FOREX type of trading, where we could actually really make quick hits on shorts and longs. So right now, the date is January 15th, 2026. This is the date that's going to decide everything, but things are going to be happening way before this date. You can't wait for this date, right? Because it looks like they're going to win. They're going to implement this. So January 15th, you could mark it, you could circle it, you tattoo it on your body if you have to. But really, you got to react before this date. But I'm bringing this out to you so you could actually see like what's going on. We guessed every wrong reason. Okay, I'm not gonna say, oh, I knew all this all along. I didn't, man. I'm always honest. When I don't know something, I don't know it. Now, I told you, Morgan Stanley Capital International got me back in like the late 80s, early 90s when I was trading Mark Yen. Now I'm not going to give the whole story, but anyway, they came out and they have a huge effect on everything. And they made a statement that I wasn't aware of. It wasn't on Night Ritter, it wasn't on Reuters. It was just like basically put out. It came out later after, Mark Yen collapsed. Because I said technically this shouldn't be happening. Now I'm going to get into that in a second because technically, when this type of stuff happens, it's short lived. Okay, so the crash down could be short lived because then what will happen is it's bargain basement because markets, this is a forced repricing of Bitcoin right now, and quants are going to have to rebalance. ESG funds are going to sell. Multi asset funds must cut crypto proxy exposure. And because strategy behaves like a public Bitcoin ETF, selling, strategy equals selling Bitcoin. It's the same trade, it's the same flow, it's the same direction, right? But it's not emotional selling, it's mechanical selling. So the flow is that, like, strategy gets dumped, Bitcoin gets sold, ETF outflows hit. Now we got to pay attention also to what? We got to make sure that we're watching good old IBIT, right? We had a little bit of reprieve in IBIT. So we got a little bit of reprieve in IBIT, then it came off. Again, we have to get over 50. So, but look, this is going to be volatile, okay? And I'm sorry I'm spending so much time on this, but it's so important, okay? So what generally it means is that we get fast down, violently down, but temporarily down, because every forced selling event in Bitcoin's history has become a generational buy. So there's the hopium right there. If you look at March 2020, the China ban in 2017, FTX in 2022, and potentially right now, Morgan Stanley Capital International 2026. So that's the structural picture. Now let's zoom into the technicals right now. Let's trade what's right in front of us, not months away. Let's break down Bitcoin short term, then move into Ethereum, dominance, and altcoins, things like that. Let's just hit it right now. And I'm sorry I didn't catch it earlier, but hey, somebody could have said something. Let's get on to the 2 hour chart right now. Let's get into Bitcoin short term 2 hour chart. This is why this is all messed up too. Um, Things are just wild right now. All right, so short term, right? Good old Tom told you that the 84, 831 would have to hold. We could potentially get back up to 91. We're falling short, of course. Marketplace is still under heavy pressure right now. So as it stands right now, let's see, what do we get up to? We went up to 89. All right. Uh, so right now, the warning level would be a break below 85, 85 900, something like that. 85. Yeah, I'll go like that. 85.8. That's the warning level. If we pop through this level here, we're going to be drifting down, potentially back down to, right. Yeah, I'd say like right over here, 84,000. Actually, I'd even go a little bit deeper. I'd say 83,000. 83,000. Let me see something here. Let me move this one down. So let's come down to like this. Let's come down to 83.5 right there. There's the next level of support. If that breaks, then we're going to be threatening the 82. So now Bitcoin's basically trading in between really 82 and 91 right now. If for whatever reason we get a reprieve and we get a hold above this 87, we could potentially pop back up to 91, but there's going to be extreme selling pressure up at 93 and 95. That's the short term. So critical support is 78,200. We got another support level at 80,006. Mid range is 84,000. Breakout trigger is above 91, and that's only running to 95 right now. All right, so that's just the way we stand. That's the extension up at 95,000. We're seeing volatility, compression, and compression eventually leads to expansion on either side of the coin. But right now, I mean, I got to digest the news that I actually put together myself. But it's actually showing that, okay, we're under pressure. So the bears, yeah, okay, they're right. So now the bullish trigger short term, break above, say 88,000, opens 91, and then potentially 95. Bearish trigger, we lose 80,600, retest the 78,250, and a possible sweep into the mid 70s. And let the market show its hand. You just got to trade it. There's plenty of money to be made on both sides of this thing. So let's move on over to like what we're seeing a little bit longer term if we didn't have this this albatross hanging around our neck. Now, since October 10th, we have been cursed. Okay, weekend pumps, Tuesday nukes happened 3 times straight. Now, if the fractal repeats, this could be the beginning of the bloodbath. Now, we also know that retail got scared out because of the death cross. They probably saw this and said, oh my goodness, I am going to retreat from buying any of this stuff. So smart money actually did accumulate, and we have some levels where we have some dollar cost averaging levels that you're going to you're going to need. So like I say, get into the pro group and we'll guide you through it right now. But right now, Bitcoin bounced after hitting the death cross. The setup triggered, all-time new highs before, but we didn't have, Morgan Stanley Capital International threatening the whole marketplace, and so we have to really pay attention to that group. But the last time, if we look at Bitcoin itself, the last time the three major bottoms were hard were easy to miss. But right now, if we look right now, where we're looking at the setup right now, the bear market setup is set up now. If we could break up through the the resistance level, and it's only around 100,000, 101,000, we could actually flip this. But that's, right now, that's a bridge that's pretty far, as we're seeing lots of pressure. But that would be quite interesting if out of nowhere, even with all this noise that's happening with, when we look at Morgan Stanley Capital International, if we can get above, say 101, we're going to flip the script here. Okay, now I'm not saying we could potentially run to like 115, 118 again, but then it's going to be chopped. But that's really good news. That's a big if. Okay, that's a big if. But the last time Bitcoin did this, the last three bottoms were pretty difficult to find. They were easy misses. Let's put it that way. They all printed the same signal. We got the RSI bottoming. We got DSS flip bullish. Bitcoin pumped 174%, 85%, 48%. So now the signal's back. RSI just hit March 2020 levels. The bounce could be brutal. Could be. We got to keep our eye on Morgan Stanley, Capital International. Okay, we could get a massive decrease first, and like I said, it's usually short-lived. Now let's move on over to good old Ethereum. We got Ethereum that's holding on with both hands in its teeth. It's really at critical support levels right now. It's still sitting at 2,800, which is good. Main support right now, you got to watch the 2,600. You got to watch the 2,000 level. Now, Ethereum is stabilizing right now. It's nowhere near leading because of Bitcoin dominance. Now, we got Ethereum versus Bitcoin. That hit a macro level reversal zone, and that's usually where rotation starts, right? So where's my chart about that? I want to show you that chart. What's going on with these charts? Now we had this happen in 2017, 2021, and it's forming again right now. But right now, Bitcoin dominance. Bitcoin is the rage right now. So if we look at Ethereum itself, we're seeing itself that it's in huge discount zones. That is for sure. So we're in a correction phase right now. We'll get heavily into discount. Once we can break above, say, 4,500, okay, now we could start to move. But again, it's all about, Bitcoin itself, dominance, right? Now, we could make an argument for like Ethereum actually tracking gold. We've been making that argument, but so far it's been very, very delayed. If we look technically, we got the same 4-year range, same failed breakout, same shakeout into support, and gold rallied 142% after this exact move. Now, Ethereum just hit the same inflection point. If history repeats, this breakout is going to catch everyone off guard. Now, as I said, the main key levels, support for Ethereum sits really at 2,800 and 2,600, and the main support's at 2,000. We got resistance at 3,000, 3,150, and of course 3,600. So we're sitting really right now at 2,800. Ethereum looks a lot like Bitcoin 2021 in reverse. Sentiment says bearish. Structure says, you got to accumulate it. Now let's move on over to good old Bitcoin dominance. We'll finishing up with that. I'll tell you how to get into that group that we're talking about. Right now, Bitcoin dominance, a little bit lower. It's 58.78. Not anywhere near it needs to be to kick off all coin season. That's for sure. So Bitcoin dominance so far, tapped out, near 59.5%. And generally, this is where the cycle flips, right? But this is a totally different marketplace right now, man. I mean, we got a lot of crazy stuff happening. So we got to just wait until, we could start to see Ethereum starting to rally. That would be a good point that, we could talk about altcoin seasons. Because altcoin season themselves, they're not in anywhere near a breakout mode yet. They're in accumulation. Right, we're looking at depression mode right now for alt season, right? So they're not, like I said, they're not in a breakout mode, they're in a setup mode. This is where smart money accumulates. And really, crypto market feels bearish, and that's basically the setup. All right, cycles, signals are lining up. You got the Ethereum, Bitcoin reversal, Bitcoin dominance kind of topping out, retail exiting at the bottom, flows are stabilizing, volatility is contracting. But again, we got that wild card, man. We got to see how the marketplace reacts. Look, the big players are not taking any chances right now. So that's really what's weighing in on this. Now, if Bitcoin can clear, say 90,000, 91,000, we got a chance to pop through the 100, then we could maybe potentially reverse the script. All right, before I wrap up with you guys totally, how do you join this group that I'm talking about? It's real simple. You click this link right there. You would take an over 2-hour, totally free Telegram trading community. Now, we're talking about DeFi in there. We're talking about daily setups, shorts and longs on Bitcoin and other coins right there. We're trying to maximize trading opportunities for you guys. Hey, if you want to go it alone, we offer you 2 outstanding brokers to choose from. FOREX, low fees, fast execution. BTCC, low fees, fast execution. They're both giving away incredible bonuses through our links. I believe that with WeX, you get no fees for life, and with BTCC, you're getting a $500 token giveaway. Small accounts be great, but really, what I suggest you do is you join our pro trading community, and let's stack the stories together. Let's make some friends. Let's it's a place that you can actually develop friendships for life, because you truly, if you're staying in and watching these videos now, you are a crypto maniac like everybody else, which is a cool place to be, because it's going to be the future. It's going to be the future, but we got to get through it. We got to get through it. All right, so that's the full picture for you guys right now. We got good old strategies on the ropes, that's for sure. We got the institutional bombshell behind the October crash that flows, the flows that matter. The January 15th ruling is coming up. We got some short-term setups in Bitcoin and Ethereum, dominance in alts. Now, always come on over to X. Follow us on X, where we talk about Bitcoin, crypto all day, every day. So what do you got to do? Well, I would suggest you join our pro group. What else you got to do? Well, you got to trade with your head and not over it. What else you got to do? You got to do your own research. As you know, I am not a financial advisor. I am a trader just like you. And of course, as a short-term trader, you got to enjoy the party, but dance near the door. Please leave some comments for me. Tell me what you think. Don't bash me that much. I mean, I did miss it. You're right. I did. But I look forward to reading your comments. And also, remember, stay healthy, stay safe. Don't over leverage. Cheers. Oh, and don't enjoy the party. Enjoy the party, but dance near the door if I haven't said it. Cheers.